What's going on, everybody, and welcome back to the channel. So before we get into today's video, I first got to give a big, massive thank you to all of you guys that have been following the channel for the last several months, as we have now reached 1,000 subscribers, and I really couldn't have done it without all of you guys. So I want you guys to know that I really do appreciate all of you guys that comment, you like, you've subscribed, and you watch all the videos, because you guys mean the world to me, and really, I could not have gotten to 1,000 without you guys. And I know everybody says that, but it is so true, because you guys are the ones that are supporting the channel and helping it reach new viewers, and I can't thank you guys enough for that. So I know in my last video I mentioned that I would be doing a 1,000 subscriber giveaway, and I am still doing that. Now, if you want to know how to enter into it and what the details are, make sure to stick around for the whole video, because somewhere in the middle of it I will be dropping what the requirements are to get into it. So with that being said, guys, let's get right into today's video. So as you all know, a couple weeks ago I did a video talking about ARK Invest's Big Ideas 2021 research report, and I wanted to follow that up with a string of videos kind of covering some of those disruptive industries and some stocks that are within them. Now, in today's video, I'm going to be talking about 3 different 3D printing companies that I believe have the best chance at being dominant players in this rapidly growing industry. So as you'll see when we go through the video, all 3 of these companies are the top 4 holdings in ARK Invest 3D printing ETF, ticker symbol PRNT. Now, obviously, if ARK Invest has an entire ETF geared just towards 3D printing stocks, then that means it's at least worth exploring. So I want to share my research with all of you guys. Now, today's video can be broken up into 4 main parts. In part 1, we're going to talk about what 3D printing actually is and what ARK Invest believes this industry can grow into, and why it's also being considered the 4th industrial revolution. In part 2, we'll get into the first company on the list, which is XONE. Part 3 is going to be the second company, which is Stratasys, and then finally part 4 is going to be the last company, Desktop Metal. Now, as usual, timestamps will be down in the pinned comment, along with the link to the Discord if you want to join a community of investors. And if you guys appreciate a video like this, then all I ask is that you smash that thumbs up button, which you guys have been doing a hell of a job at. My last one got like 250 thumbs up, which is the most I've ever gotten. So I appreciate all of you guys that are in the thumbs up squad. Let's get into it. So 3D printing is a form of additive manufacturing that builds objects by adding layers together, whereas traditional manufacturing is subtractive, meaning they remove materials from larger blocks. This video really demonstrates the process from a high level. You have the material, which could be plastics, metals, or even powders, which is then sprayed with a liquid binder, creating a bond between the first layer of powder and the second. This is then repeated until the full size of the product is completed. Now, as this technology improves, this is a process that can be replicated at large scale. What 3D printing does is it collapses the time between design and production, shifting power to designers and reducing supply chain complexities at a fraction of the cost of traditional manufacturing. Now, ARK believes that 3D printing is really going to be the next industrial revolution and will change how design and manufacturing are done. They estimate that the global 3D printing industry will grow at a CAGR of 60% over the next 5 years, reaching a market size of $120 billion. ARK also points out that while revenues did decline in 2020, the industry as a whole received a substantial boost in exposure during the Rona. 3D printers were used to help with the manufacturing of a wide number of essentials like ventilator parts, face shields, respirators, and even face masks. Now, the crazy part is that these end consumer products are such a small portion of this market. ARK is projecting that aerospace, automobile parts, and machinery will account for nearly 80% of the total 3D printing market, which, like I said, is still in its infancy stage. Now, here's a quick clip from an episode that Vice made on 3D printing to really show you the benefits of this technology and how it's improving supply chain inefficiencies.
In 3D printing, the first 20 years was used for prototyping. And now we're going into a new phase of 3D printing where we go from prototyping into mass production. And that has huge implications. So whereas before you had a factory that made one engine component in the US and then another component overseas, and then they ship the stuff around, that set up the whole trade system that we've basically architected the world around. Now you can print parts anywhere as you need them to produce a product.
So we're right at the beginning of
a revolution. Yeah, this is a fourth industrial revolution in the making.
Now, obviously, those are some very big statements from the CEO of a company that we're actually going to talk about later in this video, but he's not wrong. While there's many use cases for 3D printing, from prototyping to product design, the biggest disruption, in my opinion, is going to come in the manufacturing process. Right now in manufacturing, you're essentially taking several different pieces and assembling them all to make one final part. Now, with 3D printing, you don't need to create the several different pieces. You can just make that one final end piece, and obviously that gets rid of a ton of risk in the supply chain. So to get this point across even further, I want to show you another clip of a startup explaining how 3D printing is revolutionizing the aerospace manufacturing industry.
This is the first large part that we made, which was a fuel tank. Normally getting a tank of this size in like aerospace or rocket quality would take you well over 12 months.
How long did it take you to make this?
It's like 7 days of print time. Actually,
7 days.
Now that it's developed, yeah, 7 days, yeah.
Okay, so now that we understand just how disruptive 3D printing is, let's take a look at ARK Invest's biggest bets on 3D printing. So the first company on the list is ExOne Stock, ticker symbol XONE. Now, as of today, they are the largest holding in ARK's 3D printing ETF, accounting for roughly 12.7% of the overall portfolio. Over the last month, ExOne Stock is up a massive 165%, so clearly this one has risen very quickly and now has a market cap of just over $1 billion. Now, getting into the specific business, ExOne really specializes in binder jet technology, or BJT. This is the type of 3D printing I explained earlier in the video and is really the key to reaching high volume production of 3D printed parts. The video I showed at the beginning was actually directly from ExOne's YouTube channel, so if you want to learn more about what they do specifically, you should definitely check that out. Now, ExOne put together this matrix that shows how far out different additive manufacturing processes are from industrial use. Binder jetting, which they have circled here, is less than 2 years away from industrial use and probably 3 years total from widespread industrial use. Obviously, once this reaches mass adoption, it's going to grow like wildfire and could really kick off the start of this new industrial revolution. As of Q4, ExOne has several BJT printers that can meet the requirements of almost any project, with more than 20 qualified printing powders that can be used in applications like prototyping, metal casting molds, and research and development. Now, one of the things that I really like about their business is the diversified customer base and potential for exponential growth. No one single customer represents more than 10% of their revenue, which is great because they don't have the inherent risk that comes with the majority of your revenue coming from one source. However, the thing I see when I look at this chart is the potential. If we reference back to ARK Invest's research into this industry, you can see that aerospace, automotive, and machinery will be the 3 largest sectors, accounting for $400 billion in market size. Now, in 2019, aerospace and automotive only accounted for a little more than a quarter of their total revenue. This means that if those specific sectors grow to the size ARK is projecting, then there is still a massive amount of potential revenue growth that will only increase in the coming years. Now, looking at a quick overview of the financials, revenue comes in at $59 million for the trailing 12 months, with just about 45% of it being recurring, which is also something I love to see. Now, another key metric here is that gross margins are already at 33%, which I believe will only get better as the industry itself expands and revenue scales. And from a balance sheet perspective, they are also in great shape. At the end of Q3, they had $40 million in cash with total debt of only $3.4 million, which means they have a cash to debt ratio of more than 10. This should give them more than enough runway to continue innovating without taking on more debt. Now, I do think it's important to point out that ExOne did use the recent momentum in stock price to raise an additional $90 million before certain commissions and fees, with the intention of using these net proceeds for working capital, general corporate purposes, and strategic investments, which should accelerate their ability to continue innovating and trying to bring this technology to the mass market. Now, one thing that I want you to keep in mind as we go through this video is that they have a market cap of $1 billion with $59 million in revenue. That means they have a price to sales of about 16.9 or roughly 17. And that's very, very important because when we look at the next 2 stocks, one seems really undervalued and the other seems really overvalued. So I want you to keep that in mind as we move through the video. All right, guys, so here's the details for the giveaway. The first thing you got to do is you got to subscribe. If you're not subscribed, you're not going to know when I announce who the winner is. So be sure to subscribe and turn on the bell notifications. Now, there's going to be 2 gifts in this giveaway. The first part is going to be some sort of stock market related gift. And if you want to know what some of the things are that I'm looking at, be sure to check check out the Discord because I put some of my suggestions in there. The second part of that is going to be $50, which I'm hoping you will spend on an investment. So I want you to let me know down in the comment section what you would buy with $50. And you don't got to say half a share of Tesla, or not half a share, but just let me know which stock you would buy with that $50. Now, this last part isn't a requirement, but if you want to go above and beyond, then be sure to smash the like button because it helps out in a massive way. And I can't thank you guys enough. So best of luck to all of you guys. Let me know down in the comments which stock you would buy with the money. And if you want, let me know what you guys would like as a stock market related gift, or head into the Discord to let me know there. Now, let's get back to the video. So the second company in today's video is Stratasys Stock, ticker symbol SSYS. Over the last 6 months, Stratasys Stock is up 237% and is trading at $49 a share with a market cap of roughly $2.35 billion. Now, I won't spend too much time talking about their actual 3D printing business because the theme is going to be the same throughout the entire video. So I want to use this time to focus on the factors that I believe make them stand out from the other two companies. So Stratasys has more than 100 application engineers worldwide, runs the largest 3D printing service bureau in the United States, and has more than 300,000 parts for aerospace already in the air flying. And as you know by now, aerospace will be a massive beneficiary of the 3D printing revolution. Now, they also have a network of more than 200 channel partners, making them a go-to player in this rapidly growing industry. If we look at their list of existing customers, I think you just might recognize, I don't know, maybe 1 or 2 of them. Now, this is really good because aerospace and automotive will be the two biggest markets within this industry, and already they have existing relationships with the biggest players. For aerospace, they literally have every dominant company like Boeing, Airbus, NASA, Lockheed Martin, and Raytheon. And in the automotive sector, they have Ford, Hyundai, GM, Jaguar, and Honda. So if I'm looking for a company that is sure to be one of the fastest growing stocks in the 3D printing industry, then this is one that I have at the very top of my watch list. Having customers like the list that I just read means that as this technology advances, Stratasys is going to have a direct sales pipeline to some of the largest companies in these markets. Now, before moving on to the last stock for today, I quickly want to cover the financials and the valuation because this one seems very attractive. So from an overview, they have $308 million in cash with 0 debt on the balance sheet, which is just really dang good alone, but it gets even better. They also produced a positive net income in 12 quarters over the last 4 years, while investing more than $500 million into research and development. Now, on the valuation side, with revenue of $540 million over the last 12 months and a current market cap of $2.35 billion, this gives them a price to sales of just 4.36. which to me seems incredibly undervalued given the type of growth this industry is about to experience over the next 5 years. So Stratasys stock is one I will definitely have at the top of my watch list, and to be honest, I may even start a small position while I continue researching the company, and if I do that, I'll let you guys know down in the Discord, so if you want that kind of alert, definitely check it out in the pinned comment. Now, on to the last stock for today. So the final company on the list is Desktop Metal, ticker symbol DM. Now, they are the 4th largest holding in ARK's 3D printing ETF, accounting for roughly 4.5% of the overall portfolio. Now, over the last 4 months, Desktop Metal is up just over 200% after going public through a SPAC merger. Now, taking a look at their product portfolio, they have 4 main products. They have the Fiber and Studio system, which are office friendly and best for low volume production. Then you have the Shop system, which is really a good in-between product for mid-volume production. And finally, you have the Production system, which is a good high-speed mass production machine that is best used on factory floors. This one is expected to start shipping in volume in the back half of this year, and this is the type of product I could see having massive potential with, because the biggest sector within the industry, in my opinion, will not be the office-friendly products. The large-scale mass production products is where I personally believe the real money will be at. Now, you can't sell your 3D printers or services without a distribution network, and just like Stratasys, Desktop Metal has a large network with coverage across more than 60 countries in pretty much every developed region of the world. They also have key partnerships and investments from some of the largest automotive companies in the world. Guys, like I've been saying, aerospace and the automotive industry are going to be the 2 biggest sectors in the 3D printing industry, and it's really no surprise that every company we've talked about has bragged about the customers they have within the automotive and aerospace markets. So for Desktop Metal, they have strategic investments from Ford and BMW value with the goal of accelerating the penetration of 3D printing into the automotive industry while touting customers like Volkswagen, GM, and Toyota. Now guys, I gotta talk about one of my biggest concerns when it comes to Desktop Metal, and that comes from the valuation. I want you to remember that Stratasys Stock has $540 million in trailing 12-month revenue with a price to sales of just under 4.5. So Desktop Metal is expecting 2021 revenue to come in at just about $75 million. If we take their current market cap of $6.91 billion and divide by 75 million, we get an insane price to sales of 92. Yes, you heard that right, 92 price to sales versus Stratasys, who has a 4.5. If we assume a price to sales of 10 is fair value for them, then that would mean they're pricing in about 4.5 years of future revenue growth. Meanwhile, Stratasys is just over here chilling at a 4.5 pricing in current revenue. So obviously, if you're looking at these three companies from a valuation standpoint, Desktop Metal definitely seems like the overvalued company. Meanwhile, Stratasys seems like the undervalued company, and maybe you could argue that XONE is the fairly valued company at a price to sales of 17. Now, for me personally, if you forced me to pick one of these stocks, I would pick Stratasys just because they already have a massive existing customer base with some of the largest players in the aerospace industry and the automotive, which, as we all know, are going to be the two largest sectors. Plus, with the cherry on top, they're trading at a 4.5 price to sales, guys. That is just incredibly undervalued in my opinion. Maybe it's not to you, but to me it is. So I hope you guys enjoyed today's video, and if you did, be sure to subscribe to the channel because I drop videos every Saturday and Sunday. And also, if you like the video, be sure to hit the like button because it helps out in a massive way. So with that being said, guys, I appreciate you watching the video, and I will catch you on the next one.